Hello and welcome to the Investment Coffee Break. Now today we're going to be discussing the Managed Portfolio Service, or MPS. Now these are not portfolios tailored for any one individual, but rather a range of portfolios designed to meet different client requirements. Today I'm joined by David Hood. He's based in our London head office. He's the head of our Central Investment Solutions, and he also heads up the team that puts these portfolios together. David, can I start by asking what exactly is MPS?
So MPS is a range of 7 portfolios to cater for various levels of risk tolerance that clients of advisors might have. There are 7 of them because we found that's the right number to cover the range of those investors from the very cautious level right up to the more adventurous end of things, willing to take on more risk hopefully in exchange for a better long-term return. We work with a number of third-party risk profiling firms which advisors use to gauge their clients' tolerance to risk. These are firms such as Dynamic Planner or De Facto, which you may have come across, and this helps ensure that each of the 7 portfolios remains suitable.
So how do we manage and then measure the risk of each portfolio?
Yes, it's a good question. When we think about risk, we're primarily thinking about how diversified a portfolio might be. So if we take it to an extreme, just to give an example, if we were to put all of an investor's money into one single current company stock, that would clearly be very risky. It would be exposed to all of the risks that company is exposed to, whether that's through the economic environment or more very specific risks to that firm, how it's managed, how it's governed, and perhaps the market risks that firm faces. It's a bit of a cliche, but the old adage of not putting all your eggs in one basket is the thing that's particularly relevant to investments. And so if we're thinking about the strategic asset allocation, which determines the level of risk and the level of diversification, at the lower end, we'd see an allocation that includes diverse exposure to bonds, precious metals, real estate, and then some equity exposure. Whereas at the higher risk end, we'd expect to see more of a concentration in equities. So it's really this strategic asset allocation, this mix of high-level assets that gives each risk level its cruising level of risk, if you will.
Okay. And so does the level of risk move around or does it stay constant?
So there's an aspect of which we have this cruising level of risk, as I say, but also our asset allocation committee will take views on whether the current economic environment and financial market environment warrants taking on more risk. So just at the moment, we have a slight underweight to equities. So that is to say that the asset allocation committee is slightly underweight risk today, just given the current environment. And these tactical positions are reviewed every month in the context of how markets and the economic backdrop and the political backdrop has changed. It's something we're always looking at, considering risk from a number of different angles, and that's something that myself and the team are very much focused on.
Okay. I mean, you mentioned the asset allocation committee there. Who's on that committee and who else is involved in the MPS construction?
So the asset allocation committee has representation from the research team. So that includes our head of research, our head of strategy, our head of asset allocation and fund research. And then the other half of the committee is made up of practitioners, so investment managers from around the firm who have seen a few market cycles and will bring their experience and knowledge to bear within that committee in terms of deciding whether to go over or underweight particular regions or asset classes. Beyond that, MPS draws upon the wealth of experience and knowledge of our research team and our strategy team. So that's a group that totals altogether over 30 people. So these are professionals who have long experience in the industry, looking at either the macro environment or bottom-up selection of either fund managers or firms and equities that we could invest in.
Okay. Now, the other question I wanted to ask is that we see a lot in the press about the pros and cons of active and passive investments. What does MPS use?
In short, MPS can use either. And we believe sometimes there are occasions where passive investment is appropriate, but there are also situations where we believe it's right to use active management. And predominantly in MPS, we use active management, but we use RBC Brewin Dolphin's size and scale to negotiate down costs on behalf of clients where we use active management. So we think we're very keenly priced for what's on offer here. To give an example, the US equity market is generally considered to be very efficient. There are lots of investors buying and selling each day, and so we have a reasonable exposure to passive US passive funds in the US, whereas in active management, we're much more likely to use active in situations such as emerging markets, where we believe there are many more inefficiencies and where an active manager can really find anomalies in the market where they can really make a difference to investors' returns.
Excellent. David, thank you very much for your insight, and thank you for joining us. Please let us know if you have any other questions about our MPS, our Managed Portfolio Service. We'd be more than happy to answer them. I hope you found this video useful, and we look forward to you joining us next time.